All right, y'all, back to work. Fantastic job today trading those range rotations we talked about in last night's video. And boy, speaking of ranges, we basically traded sideways the entire day today, which means we have a beautiful range on the tick charts right now. Now, I say beautiful because if you know my style of trading, I love sideways range markets. The key to making money in range markets is buying low, selling high, trading range reversals. Now, reversals come in lots of shapes and sizes. So tonight, I want to talk about three my favorite range reversal trades that you know where to time the entries, where to take profit. We're going to cover the entire money-making roadmap in tonight's video. By the time we're done tonight, you'll be an expert at range rotations, getting ready for tomorrow morning. So charts are ready. Enough of the intro. As always, thanks for tuning in and watching my videos. Let's dive right in now. Let's make some money on some range reversals on Wednesday morning. S&P SPY, ready to go tonight. Nasdaq triple Qs are always ready, aren't they? I've got 4 clues on these charts telling me where I think the money is made tomorrow. The first clue is right here on the hourly time frame. I like to use the hourly chart, the highest time frame I use, as a directional filter. It's very easy to see right now. The buyers were in full control. So clue number 1, we are filtered to the buy side for tomorrow. Second clue is down on the calendar for tomorrow. We don't have any major news tomorrow. In fact, nothing really big until Friday morning's CPI report. But there are 2 things on my mind for tomorrow. First thing is the ongoing back and forth between the US and China regarding trade talks. We've seen the last couple days the rhetoric's been kicked up a bit with those rare earth export controls. According to Trump right now, November 1st is the deadline to get some deal done with these export controls, or else the tariffs will keep ratcheting higher. He said, 155%. So we'll definitely have the news feed running tomorrow morning, the trade room. Be aware of that tomorrow morning. Also, don't forget, arguably one of the biggest news reports of the week is tomorrow night after the close. We got Elon and the Tesla crew reporting earnings. Remember, they just brought the prices down on their Model Y to compete with or offset the lack of EV subsidies. So everyone wants to see how those quarterly earnings looked in the third quarter. Be prepared for that tomorrow evening after the close. If you're trading tomorrow afternoon, be aware markets do strange things before big earnings. So be careful in the afternoon, tomorrow afternoon. So will we hear more from the US and China? Will they find a deal on these rare earth exports? And again, buckle up tomorrow afternoon for reports that are coming out from Tesla. That's our second clue for tomorrow. Third and fourth clue now are down on some tick charts. I use the hourly chart for direction, but the entries are coming off the tick charts. And by the way, if you're watching for the first time right now, this is a 7,000 tick chart, all the time frames tonight in the upper left-hand corner, and that yellow line right there, the only indicator we need to make repeatable profits is that 21 EMA. I've got 2 more important clues here on the tick charts. One clue is this range right here. Now, I mentioned earlier, ranges love to rotate, right? Love range-bound markets. Now, we're overall bullish on the higher time frame, so these ranges are more likely now to break out going higher. Ranges love to rotate. That's a really big clue for tomorrow. And then speaking of ranges, we have those same ranges down below us right now. On the S&P, I'm watching 67.26, 67.54. These previous ranges are just begging for a breakout pullback. And because that range above us wants to rotate, boy, these would be some very attractive areas to be buying this market on a pullback tomorrow morning. We'll cover those entry tactics here in just a few minutes. But let's talk about ranges though, because the most important thing, there's really 2 things you want to think about when it comes to ranges. First of all, they love to rotate, right? They rotate up, down, back and forth with symmetry, right? You can measure the amount below, the amount above, the amount above, the amount below. We go into more detail on this in our free video classes on our website. But the most important thing I want you to think about right now is the edges. The money is made in range markets around the edges. For example, below that low, Buyers buying the edge above that high, sellers selling the edge high. The money is made around the edges. So right now, the edge at 59 and a quarter, the edge at 89 and 3/4. Remember this. The messy middle, right? The messy middle, one of the easiest ways to make more money in ranges and avoid losses in ranges is to focus on buying the edge low, selling the edge high. And there's one type of entry pattern I use. We're trading inside the messy middle. So let's break this down right now because, like I said earlier, that breakout pullback zone, I would love to trade the edges of that range down there, of a pendulum swing off the high. So lots of support. One of my favorite trades for tomorrow is I would love to see a really sharp run going lower here, really make it look like this market's going to break out going lower and look for a bear trap down here. Now, bear traps are just like we saw this morning, right? We break down, we get bears trying twice. Once, higher high, twice. Now, once we see bears trying twice, now we know where their stops are. Now we know where their pain is. And once those bears fail, we know that that range wants to rotate. We're outside the edges of that range. I can now buy on my way back up into that trading range. Now remember, the messy middle is always the most difficult part to trade. The one type of entry pattern I look for in the messy middle is a technical bear trap. It's very simple. It's a shallow pullback that will barely miss that moving average. It's a higher high in price, and I want to get in right below that low. Now we know where the market wants to go, right? It wants to go from one edge to the other edge. It wants to rotate. So a bear trap, an add-on entry, and we're letting that sucker rotate going higher. Now, a bit later on in tonight's video, I want to talk about if we end up going higher here because there could be some bull traps to short up top, and there could definitely be some breakouts going higher. We're going to cover that in just a moment. But one important question though for you, what if we don't get that bear trap down there? Remember, this is a big move higher we saw yesterday. So don't be surprised here. If we saw a nice strong run lower, but we don't get a chance to trap the bears in and squeeze those stops. Oftentimes after a big move higher, it'll really kind of jackknife off that low. It'll V bottom, if you will, off of that low. So if we pop up and begin to grind going higher, we call these V bottom trades in our trade room. The key will be do not chase after it. Your patience is rewarded by looking for an entry off the low of a channel. I'm going to draw a trend line off those highs. I'm going to mark that trend line off the low, find that channel. And as we always say in our trade room, the first test is always the best test off of that low. Now, I'm keeping it simple in tonight's video, but this could be any of the entry patterns you guys are learning inside the free video course, like a bear trap below a prior swing. One of my favorites is getting below that 21 EMA, a 2-try bear trap, squeeze those stops. And again, we know where the market wants to go. It wants to rotate to the other side of that trading range. So if we don't see a bear trap down there and it pops up and starts grinding higher, I'm going to find that channel. And whatever you do, don't miss that first test is the best test. Could be a bear trap, could be a 2-try bear trap, which reminds me, I know most of you folks watching right now, you guys know these patterns. You're making money off these patterns already. But if you're watching for the first time right now, this might be a brand new language I'm speaking, a brand new strategy I'm talking about. Don't you worry though, because I teach this entire system. In fact, I have a ton of examples of all the entry tactics I'm teaching right now. I cover this all in my free trading course. What I'll do is, guys, I'll put a link up topper for you, upper right-hand corner, hit that link that popped up there and take that free trading course because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be each day. More importantly though, in that free video course, I want to help you time better entries. I'll teach you my 4 favorite entry setups so you can time better entries, get your confidence back, get your P&L back in the green again. Guys, bottom line, the markets are way too good right now not to be making consistent profits. So if you've lost your confidence in your current strategy, if you're still missing the best moves each day, hit that link that popped up there. Watch that free trading course. You're going to love all the trade examples I include in that short video series. The best part is it's completely free for you. Be aware too, guys, I'm going to put all of the important links you'll need to learn the entire roadmap, get your confidence back. I'll put all those links below tonight's video in the description of the YouTube video. Start first on the free video course. Most folks start making money all on their own, all from that free video class. And if you're on the Twitter or the X platform during the day, I post a ton of videos and charts and mindset stuff on the Twitter platform during the day. Give me a follow. All the details you'll need to learn more, hopefully earn a lot more, are linked below tonight's video. That's where you want to go to get more information tonight. So where did we leave off? Yes, we're talking about getting that range reversal coming in off that low. I talked about a couple different bear traps I'm watching there. And again, in the moment, we will talk about going higher here. There's some easy money to be made going higher right now if we have the right strategy. We'll cover that in more detail here, Nasdaq, in just a moment. One thing I want to remind you is that anytime we see a breakout of a trading range, we begin to look for what are basically measured moves. The breakout leg is the measuring leg. I say this because we have this big breakout pullback zone down bottom there, and just in case things get a bit wild for tomorrow. For example, I would not be surprised at all if we ran lower, got a beautiful bear trap down here, 2-try bear trap, had a nice easy winner going higher, and you'll learn this in the video course mentioned earlier there. I always take a 1-to-1 first target, move that stop up to point of entry, right? Quick first target, get rid of risk, leave a runner for the rotation. Okay, so in these situations, we oftentimes do get an easy bear trap winner off of that low. But again, with those big support levels down below us, and who knows what Trump and Xi will say tomorrow, but these trade deals right now, do not be surprised if we see one more leg going lower. Now, this will feel like a reversal, but again, don't forget, this is the tick charts. We don't use the tick charts for direction. The tick charts are for entries. And one of the most important things I can teach you about ranges is that when ranges break out, the breakout leg is a measuring leg. That's important because now, as it runs going lower, again, this will feel like a reversal. When I was a rookie, I would chase these moves going lower. That's why I learned not to chase after them, right? That's why I use the hourly chart as my directional filter. So what happens is we trap those bears in, we take our first profit target, we get stopped out of the point of entry, the market then runs back lower, and again, it feels like the world is coming to an end, but again, there's a tick charts, not the hourly chart. We find our measured move down here, and now we wait for another bite at the apple. Let those rookies chase after it. I don't like to pick bottoms, personally, right? I don't like to blindly buy them here. I would rather wait for the bears to commit to it, then I can use their stop losses to fuel that run going back higher again. The 2-try bear trap, like I teach in the free video series. And then don't forget, if there's one situation where you must add to your winner here, it's in these bear traps off a measured move. Because this will fool so many people, you can almost hear the price action going, oh, they got me. These things love to rip after those measured moves get hit. So bear trap triggers, we separate off the moving average, we get a higher high in price. Remember, separation is strength. The higher high confirms that strength. I want to get back underneath that low, and we're adding to our winner. Again, bear trap. It's basically what we call a retest trade in our trading, right? We run back, we retest that low. I'm watching for a measured move down there. Anywhere below that low and that measured move, right? That's our money zone. Anywhere between that low and that measured move, that's our money zone. Bear trap. add-on, and you know where the market wants to go. It wants to go back up and take out the edges of these ranges, right? Edge to edge, trade that rotation. Good, good, good. That's our game plan as we go lower here. And don't let that breakout fool you, right? Don't forget how bullish we are right now on the hourly time frame. Let's now go talk about going higher now, because the Nasdaq also, big range here on the Nasdaq. Let's go talk Nasdaq right now. Now again, very important, the anchor chart, the highest time frame. It's for direction. It's one of the most important parts. You can easily see right now the buyers are in full control. Before we talk the tick charts on the Nasdaq though, if you're enjoying tonight's video, please help me grow this channel, will ya? By hitting that like button, and make sure you subscribe. I know we're all busy people these days. I appreciate you guys tuning in and watching my videos. So as always, guys, thank you so much for the likes, the subs, all the ongoing support, all the love I get in the comment section below. I appreciate you guys tuning in and watching here this evening. Now, I'm done begging for likes and subs. Let's now dive in to tick charts right now. Tick charts are for entry tactics, right? Tick charts are for entries. And you can see a couple clues here on this Nasdaq right now. First clue is this range right here, right? Now, what do you notice about the range on the Nasdaq? The edges are just begging to get hit right now, right? That edge above the high at 368, that edge below the low at 203 and a quarter. The edges have not been touched yet, right? So these are fresh edges. These are begging to get bought and sold, right? We know that ranges love to rotate, and we know that the money is made below the edges, above the edges. Now, another big clue here. Look below us. Breakout pullback zone all the way down there. That is unfinished business. It's not an if, it's a when. I can almost guarantee you at some point this week, might not be tomorrow, but it's coming soon though, they will come back to that 25.05 and 3/4. That range back there is looking very, very lonely, right? After a big move higher like that, it is just a matter of time before Trump says something or Tesla does something tomorrow night. It's only a matter of time before we get that big breakout pullback going lower. So remember, we want to get that run down outside the edges, trap those bears in, squeeze those stops, edge to edge. Remember, it may go break down, bear trap up, and complete that measured move. Do not let that fool you. Trust me, once you learn this measured move technique, these will be your favorite trade, because it puts the market in such an oversold territory. All the rookies chase after it. I know that because I was on the wrong side of those trades quite a bit 20 years ago when I was first learning. So we talked about the bear traps underneath this range. It's all the same stuff mentioned earlier on the S&P. Now, as we rotate going higher here, remember, we're an overall bullish market. I like the idea of trading a breakout, but looky, that's all-time highs up there, right? Now, what do you think? Could I sell off the high? Well, first of all, where would you do it? You'd have to do it at the edges, right? So the edge would certainly be criteria number one if I want to sell off the high. There are two patterns, two setups to look for to short off the high. One is a crown reversal pattern. Now remember, we're bullish overall. So this short trade is a little bit more cautious, if you will, right? A little more patient, if you will. It's very simple. I'm going to use that 2-try rule I mentioned earlier, but now it's buyers once, lower low, buyers twice. This is very important. Please don't miss this detail. It needs to be a lower low. That way buyers have tried twice, and it needs to be above that high. The reason why it needs to be above that high is because I do not want to be selling as we go lower. Why? If I sell as we go lower, what's waiting down there? Sometimes it's a channel, right? Sometimes it's an easy bear trap. So I don't want to sell. Remember, we're bullish overall. I don't want to sell as we go lower. Okay, I know it's tough sometimes, but you must get used to selling as we go higher, right? Selling as we go higher. In this case, it needs to be above that high like this. And I teach the entry tactics in that free video course. On these trades, it is a quick first target. It is get rid of that risk, bring that stop down fast, right? Quick target, get rid of risk, because again, hopefully it will keep on rolling all the way to the other side of that range. But do not be surprised though. Oftentimes what happens is there'll be a channel right here, and if you're not disciplined at getting the entry where it needs to be, you'll be selling right into that bear trap and get that face ripped off, right? So be very careful on those reversals. Again, it's called a crown reversal. Also too, on these ones, I always go half size trade. Right? Half size trade, quarter size trade, want to be more cautious, right? We go full size position when I'm going with the trend, against a trend, half size, and always, always, always sell above a recent high. Now, one more reversal pattern, the easier I might add, is a VTOP. VTOP patterns are not as lucrative, but they're a lot higher percentage, because in a VTOP pattern, it'll run up. You're not trying to short as we go higher with a crown reversal. You're waiting for it to get knocked back down, begin to grind back down, and the best ones here are going to separate off of that moving average, like that, right? What we'll do now is we don't chase it, right? We don't chase the market. We mark a trend line off that low, up around that high, and as we always say, look left, find a prior swing, and then hit that first test is the best test off of that high. Again, these are not as lucrative because you're getting a bit later, but now momentum is turned for us, right? Now momentum turns over for us. Psychologically, these are a lot easier for most of my newer students in our trade room. It still is a technical bull trap above that recent high, right? Make no mistake, you need to be selling above a high for the reason I mentioned earlier on that crown reversal. And again, we know where the market wants to go from one edge to the other edge. Those are two reversal trades I'm looking for here tomorrow. Again, half size position, quarter size position. Now, is there something I can use now? How would I know if price runs higher? What would tell me that I shouldn't be trying to sell up here? It's the moving average, right? Specifically, it's separation off the moving average. If we pop up and we start separating off that moving average, that's your cue right away. You're not trying to sell this, right? Because separation means strength. So we pop up, we start separating, right? Like we saw yesterday, right? Where the pullbacks, they don't go all the way to the moving average, right? That's what I mean when I say separation off that moving average. The most aggressive trade I take in those scenarios is it'll pop up, it'll separate off that moving average, give me a higher high in price, and I'll use that same technical bear trap like I teach in the free video series for an add-on entry, right? Basically this again, the most aggressive entry, we pop up, we separate, higher high in price. This is that technical bear trap like I teach in the video course. Now remind me again, what do breakouts do? They love to make measured moves, right? So breakout leg, measuring leg, that's where you cash your paycheck. Now, after a qualified breakout like this, now we use this range now for a breakout pullback, right? But bottom line, look left, find some of these prior highs. It'll usually be somewhere right around the top of that range like that. That will be our breakout pullback zone. Now, when it comes to breakout pullbacks, not always, but most of the time, the majority of the time, it'll be a two-legged pullback, right? So one leg, two leg, right? We saw today, right? One leg, two leg, about a measured move. Then we trap the bears in and run back from there. So I don't know how large that leg will be, but that's the formula, right? It's a two-legged pullback, and then eventually we'll get back into some of these prior highs out here. This becomes our area now to buy a breakout pullback. Now, as always, I'm not going to pick a bottom on this. This thing may roll all the way back down again, right? I don't have a crystal ball on this. What I will do, though, is once we get that two-legged pullback, a measured move, so to speak, now we wait for the price to begin pulling back to that moving average, bears once, bears twice, all of that momentum, right? All of that strength, it has one thing it wants to do. It wants to go right back up and punch its ticket back at that high, trap those bears in with that try bear trap. And if we're lucky on this, we'll get one more add-on. But for the retest, it's that same technical bear trap pattern. It's that same separation, that higher high in price, and that add-on right below that low. If you were to ask ChatGPT or Grok or look at the dictionary, what does a breakout pullback look like? This is the formula for a breakout pullback. The most aggressive entry is the initial one. I go half size in those trades, right? The shallow pullback, the higher high, and the entry from there. Then two-legged pullback, bear trap, add on, and back up to retest the high. Boy, I'm getting excited just talking about this stuff with you guys tonight on this video. That's our breakout pullback. Now, don't forget too, we oftentimes, especially with big news tomorrow afternoon here, we may see it pop up and begin to grind and grind and grind. Remember, whenever price pops and grinds like this, we find trend lines off the high. We bring those trend lines down off that low. We then look left, find prior swings. And remember, grinding markets are very strong. When price grinds off that moving average, that grinding is very difficult to stop. So I can be a lot more aggressive at buying that first test off of that low. I won't need to wait for a two-legged pullback, right? If it pops and grinds like that, I start getting a lot more aggressive on this. I want to get in underneath prior swings, bear traps, two tries, add-ons, any of the entry patterns you guys are learning in the free video classes can be applied. Remember, first test is the best test when it pops and grinds like that. And one more variation, we'll wrap things up here for tonight. Do not be surprised if we pop up and go into a new trading range. Now, these are always the easiest ones, right? These are the easiest ones. Why? Because what do ranges do? Well, when they break out, we can use the previous range for a breakout pullback, right? What does this range want to do? That range wants to rotate, right? The amount below the range, the amount above the range. So that's why I say these are the easiest ones to make money with, because that new range is a magnet, right? It's a magnet now. So the new range is the magnet. We wait for price to go below that trading range. We trap those bears in. I love to use these two-try bear traps in these scenarios. Trap them in. Add to your winner with that separation, that higher high setup I keep talking about tonight. Those are always the ones you look for in the messy middle of that trading range. So if we pop up in a new range here, I'm going to use that bear trap and that add-on, cash that paycheck at the side of that range, and we use the previous range for a breakout pullback. Right? Makes sense? Pretty simple idea there. Remember, don't let ranges scare you. Once you learn how ranges work, trade the edges, right? Trade the rotation. Keep finding those bear traps, those add-ons. Use that symmetry. You will soon love ranges like I do each day in our trade room. Right, guys? That's the game plan for tomorrow. Speaking of tomorrow, guys, the place to be, 8 o'clock Eastern time, is in a trade room. Guys, the easiest way, start making money in these markets. Come on, learn and trade along every morning at the opening bell. I'll put all the important links you need to learn the roadmap, everything you'll need below the tonight description of the YouTube video. Start first on that free video course. You're going to love those trade examples. Then come join me in the trade room and we'll do it together every morning at the opening bell. In the meantime, guys, be well out there. Be nice to each other, will you? And make a bunch of money for me tomorrow morning if you're trading on your own out there. And as always, you better be here next time. Adios, amigos. Bye for now.